Welcome to the monthly economic indicators brief conducted by the Statistics Department of the Central Bank of Sri Lanka. Let's start with the real sector indicators. The Sri Lankan economy rebounded in 2024, achieving a 5% growth contributed by all three major economic activities. Accordingly, agriculture, industry, and services activities grew by 1.2%, 11%, and 2.4% respectively. Deflationary conditions, meanwhile, commenced easing in March 2025 in line with the central bank's near-term projections. As such, in March 2025, CCPI-based inflation recorded a deflation of 2.6% on a year-on-year basis compared to the deflation of 4.2% recorded in February 2025. The CCPI-based core inflation remained unchanged at 0.7% in March 2025. Meanwhile, the unemployment rate decreased to 4.2% in the fourth quarter of 2024 from 4.3% recorded in the fourth quarter of the previous year. Further, labor force participation rate increased to 47.7% in the fourth quarter of 2024 from 47.1% recorded in the fourth quarter in 2023. The Purchasing Managers' Indices for manufacturing, construction, and services continued to expand in February 2025, indicating the continued positive developments in these activities. Moving on to the monetary sector developments, the average weighted call money rate remained unchanged at 7.95% on 28 March 2025 compared to the end of last week. The average weighted prime lending rate for the week ending 28 March 2025 stood at 8.43%. Continuing the improved liquidity conditions in the domestic money market, the total outstanding market liquidity recorded a surplus of Rs 184.3 billion as of 28 March 2025. The external sector continued its resilient performance as of end March 2025. The gross official reserves were provisionally estimated at $6.1 billion by end of February 2025. The Sri Lankan rupee depreciated against the US dollar by 1.3% during the year up to 28 March 2025. Meanwhile, during the first 2 months of 2025, export earnings grew by 3.7%, while expenditure on imports heightened by 12.4% compared to the corresponding period of 2024. Thus, the merchandise trade deficit widened to $1,144 million by the end of February 2025. The workers' remittances sustained the momentum of exceeding the $500 million level in February 2025 as well, recording $548.1 million. In the meantime, the earnings from tourism continued to remain robust in February 2025, recording $367.6 million during the month. This concludes the brief on the key economic indicators as of 28 March 2025. Thank you very much for watching.
For more information, please refer to our weekly and monthly economic indicators on CBSL website.